Hello everyone, welcome to Top Trading Edge, and today we're going to take a look at the Microsoft. Today Microsoft had an earning, and earning was good altogether, but uh, uh, market is not liking. Anyway, so uh, I, I was looking at the chart earlier, a few weeks ago, and we did mention here there is a double top here, and it is higher high and higher low, and then since it got rejected, and we predicted 2 weeks ago that is grinding trending is lower. We mentioned here trend lower since then, and we predicted that it can go up to $279, and it did test it yesterday, and right now is below the support. So it broke the 200-day moving average, and now is going down. So let's talk what's going on today and where it can go and how far, whatnot. So before that, let's take a look at the disclaimer. This video is for educational purpose only. I do not sell any financial advice or a recommendation to buy or sell any sort of securities or investment. For your financial actions, please consult with your professional financial advisor before making any financial decision. Excuse me. All right, so let's get started. As you can take a look at it, Microsoft is been grinding higher, higher, low. Every time it tests the supports, bounce back, again test the support, bounce back, test the supports, bounce back, bounce, test the support, bounce, test the then I created another support here just to test, because when you grow higher and higher, it might not jump like this. It can jump a little lower. So I was testing right here because the market was already up 125%. I mean, S&P 500 was 125%. Since then, I had to be a little cautious. So as you can take a look at it, why I said that, because Microsoft was $130 in March 2020. Very, very important to read this. Microsoft was $130 in March. In 2 years high, it is high is 350. So it jumped almost 200%, and now is 290. So today I was making one chart, I mean, in-depth analysis and what exactly happening. So let's real quick, we're gonna take a look at this one, what's happening here. So where is Microsoft here? So this is a little price action happening currently in the market. What was in 2020 and what it is now. That time, like I said here, price action in March 2020, Fed announced to bring interest rate to zero, and buy back all junk debt, which created inflation of 7% as of now. Now, market condition changes to bring the inflation down since job rates are peak and economy is at the peak. Now, Fed is reversing its rate from zero to normal rate. As market condition changes for 2022, it will affect stock market first, then the bond market slowly and steadily. So, uh, what I'm trying to say here is these are the real price action happening in the market currently. So what I did is, if you take a look at the Tesla in the time of COVID, these are the with the split price $65, it reached to 1250. That means 1800% gain. Current price is 900, so almost still people have a gain of $1,284. Same thing, Apple, 260% highest gain. Still they have the gain 240%. So this is the really balloon created so far for Shopify, Google, Square, Facebook, AMD. You can guys go through all these things on, and then you can analyze yourself. As you can see, Neo was $2. I remember, and it was $2, and I told somebody to, it's a good buy at that price. And there some people entered at $4, $2. They made a crazy profit at this price. Many people are still holding. And look at that. So see what happened. The price was 1800, 358% gain. Till date gain is 211%. Have you ever seen in a stock market normally that you see all the script? No, we are not talking only 5 or 10. These are all major blue chip company I took, so at least people can understand. It's not just the some of the stock jump crazy and we analyze. This is all different sectors. I took the um, major script, and as you can see, everybody's portfolio might have these are the scripts, these are the stocks, and they gain as of as of date, whatever the market is, people are crying, oh, market is down, market is down. Market is way up right now. And here is the proof. Still, people are gaining from the 2020, this much. Now, let's talk about the docu, because everybody remember docu, Netflix, PayPal, Twitter, Zoom, right? So what is happening, what I see right now, that market is tightening in docu, Netflix. So what happened in docu? Docu was $65, jumped to $340, $14, 383% jump. And now current price is $118, which is still gain 81% till date. This price, it was a crazy drop. Everybody remember docu. Same thing Netflix, right? 250 was the price. It went up to 700%, which is $700, which is 180% jump. And today's date is 368. Big drop on Netflix other day on earnings, right? More than $100 drop. Till date, Netflix is 47% up. So this is the really fair gain in the market supposed to be in 2 years' time. Even though we were locked down, even though we had there is no much earning going on, but if you take a look at it, these are the true growth we should see, not like 300, 400, 500. These are the balloon I call it. So these balloon, I don't only see, Fed can see, all these big institution banks, they see, but they don't go and tweet. They don't go and post it on a retail market, retailers on Twitters and all. They do actions based on the data they see. So what I like to represent here to show you the data, that this is really, really true data where it is happening. And we really need to consider the data. We cannot be bullish all day, just like every retailer wants to be bullish all time, whether market is trending is down or trending upward. We can't just, look forward. We have to take the profit on certain time. Whenever you see the market is creating double top, right? And on top of that, Microsoft like ran from $130 to this high. There must be some sort of break on the pedal, and this is what exactly happening. And now this is not the real break, according to me, if you ask me, because I started from here and I keep predicting that if these drops below 100-day moving average, which is not good, if this trend drops right here, I mentioned here, sloping resistance, $327 break, this sloping register, because I've been following here double top it created, and people were trying to be bullish on Microsoft, and I was telling Microsoft I cannot be bullish, though I know company strong, fundamentals are strong. But remember, in the market there are three things drives the stock market. It's not just the fundamentals. Fundamental can be excellent. So let's talk about it. Fundamentals. First thing is fundamental, second thing is technical analysis, and third thing is geopolitical. So technical analysis would help us to a lot of things, but let's talk about geopolitical. Geo means earth, globally, global earth news, political news, Fed news, Democrat, Republican news, whatever the bill they pass on, they don't pass. Based on that, it does affect to the company. Same thing, fundamental also. You got to take a look at the cash flow. You got to take a look at their yeah, PE ratio, forward PE ratio also. I'll take a look at it. Many things you got to take a look at it, but that's not the only thing. We need to take a look at the technical analysis. Is the most important part. Why? Because this is the real money. This is not a headline. This is, each candle represents one day of the work. So when somebody has to pour the money in, this is how the candles are created, and it creates the chart. So based on the support right here, as you can see, this sloping support we draw, and is test the support and it bounce. Then again test the support and bounce. Test the supports, it bounce. So these are the real things that are happening here, right? So whenever we see here right now, it was this small sloping support broke, and I mentioned here that this is not the good sign. I'm trying to be bearish. I wrote sloping resistance, right? Almost 3 weeks ago. Break, second time rejected, trend bearish. This was created before. And then I wrote down here, I tweet this chart also. 293 support broke, super bearish until it get back above the support line. I wrote it here too. So as you can see, it broke 200 moving average, which is, so why people asking me what makes difference 200-day moving average, 100-day moving average. Whenever those are support breaks, what happens is just like when you do Google search, right? So every traders don't go thousands of stocks. They have a screeners. When they screens, I like to find the bullish chart, for example, which are 100-day, which are above 100-day moving average, above 200-day moving average, depends on the market condition. Always want to find stock which are to about 200-day moving average. Now imagine below 200-day moving average. Have you seen Microsoft below 200-day moving average? Look at this red line. Only pandemic time it dropped, but look, all time up. Red line is a 200-day moving average. Is very rarely goes right. And now we were testing a 200 moving average. That means all the traders and big institutions, when they search, this stock won't even pop in their radar that is about 200-day. Forget about 100. I'm not even talking about 100. Is below 200. And now testing the support is already broke today in afternoon. When I tweet today, and in fact, let me show you my tweet today about say, hey, I right here. Look at this tweet. I actually tweet Microsoft relative strength of the market compared to SPY. This is the SPY was going up when the market opened up. SPY went down a little bit. That Microsoft went down. Let's open the chart right here. I'm going up. Microsoft was going down. If you take a look at it, so I tweet here and see what happening here. What did I tweet? Microsoft is selling off constant today as earning today after hours. Tune in for more alert. So that's what the trend I draw. I can't write here too much, alerts. Sometimes I gotta be a little careful, but I tweet this also. So let's get back to here. So what do I see? Should I be a bullish on Microsoft? Absolutely not. Why am I not bullish on it? And I'll give you one example right now, which I already told you about all these balloons. Still, Microsoft is at 200% up, so that's fine. Why I am not bullish? Because let's compare the market. S&P 500 is the uh, major index where we always follow because it has a 500 fortune companies and it carries the highest weightage because of strong company who has a strong earnings. So let's take a look at the SPY. SPY and the COVID time was here, which was $212, and it jumped to $482. So I measure the price from here to here. It comes out 125% jump. Now, how come 125% jump? It never ever happened in 150-year history. How come market jumped this much in 2 years? When particular time we were all locked down, right? In this At this time when the market was dropping, 35% market dropped at that time. I draw here 35% market drop on from here to here in March 2020, right? So why all of a sudden we got a V-shaped recovery? Fed comes in and announce everything. Interest rate going to be zero. We're gonna buy all the bad debt. They're gonna buy all bad junk, everything they're gonna buy to support the market because job unemployment was like what, 5-6% that time. Nobody had a job, everybody locked down, company was closing because of the COVID lockdown. So all this time they gave they created the leverage to the market, so the market love it when 0% interest rate and they buy all the junk debt. All the company, they love that, and many people benefit out of that. So the market loved it, and all this money poured in into, but that become the inflation. So to create it, when we had that situation, to create that, we created the inflation of 7% right here, right? 7% inflation, we are into it. But we did gain the job market. Right now job market is at the peak. We are the best in the market right now last 50 years. Also we are economy is also the best right now. You can take a look at it, stock market as well as all the companies, and they are turning into trillions now. Their market cap is turning into trillions. That means they are really doing good, right? So that's what the data says. And so what is left now? The left is inflation. Now inflation is very easy to control. Deflation is very hard to control because you never know to bring the job market back, and to bring, if deflation is very hard, more like a recession type to control. That takes longer time also. But inflation, with the excellent job market, with the companies market cap is turning into trillions, is very easy to control. How? Well, simple. The answer is, I created right here. Answer is right here. So these are the balloons, right? Wherever you see this is what Fed see. Fed gonna take a look at all these earnings in next 2 months, January, February, and March, and they get to know what exactly happening, price action. Based on that, they analyze and they will see, oh, okay, you know what, everybody is doing excellent, and let's raise the interest rate to probably 0.5%. Well, right now they're talking about quarter, but they can raise to 0.5% also. That would be a bloodbath in the market. Now, what do you mean by that? Well, what happens is there's a lot of room in the market. So let's go back MSFT. It's a lot of room in to go down. So we can, as a technical, we can just keep checking the supports right here. Next support would be, which would be around here, $240. But this is not the time where we are, like, we can keep trading here and look for a support. Right now is the time where it's gonna take a long period of time to consolidate. We need to see how far it can go down and consolidate and then reverse. So if you are bullish, then you gotta be wait. Otherwise, uh, this scenario always give a we need to wait, because FOMC meeting is coming tomorrow, and then they definitely said they're gonna announce the increase in interest rate in the March. 90% chances are, and I do see that. In fact, if you ask me, they should increase immediately. So we can control the demand. So basically, all these companies making trillions of dollars, if the stock price goes slide down, and the interest rate rises up, so the demands are too much high. Demand in the market is very much too high demand, so they need to control. So if, say for example, people wants to buy a house, inflation is high, so house price goes up, material price goes up, everything goes up, because buyers are buying houses such as cars, everything. Basically, I'm just talking about giving example for the house. So mortgage rate, it was 2%, right? So people love that, 2.5%, 3%. Now the interest rate gonna go up, mortgage rate gonna go up, student loan rate gonna go up, everything goes up. So the demand goes down. Once the demand goes down, what happens? Supply controls, right? So the supply goes down slowly, slowly. So so it's better that it move a little faster, not too fast, but it's quarter or 0.5%, whatever they decide. With normal interest rate supposed to be 2%, 1.75, 2%, 2.5%. That's the normal market interest rate. Should supposed to be, we were in zero. So that's the reason. What I see is happening here is we have to be on a sideline in terms of trading as a strategic traders, not the not, I prefer to be a swing traders, but strategic traders, not just like, okay, I found the support, now let's buy it. So I'm not gonna teach you here like every other trader, oh, this is the best support below 200 moving average and let's buy. Well, right now is not the time, because this is not the scenario where, because this is like flipping the coin and upside down now, because of, as I say, SPY is all the way high. We are at the tip of the iceberg now, and it can go down. So how far you can go down? Let's draw the line where I see the prices are. So I see it can, if slowly, slowly, this is not gonna happen overnight, you know. So the next support we see here, which is $238, then this is what I see right now. Will go in by 2022, and we'll open the chart back again sometime in few months, and we'll see where we are. But so far, whatever I see on these charts and it's happening, and this is like a falling knife. Look at this. This is not a like, to climb high, it takes long period of time, 2 years, right? And look at this now. It's like a really straight falling knife. So this is the real trend, man. We have to follow these. We can't, these are real price actions, right? So same thing, these are real price action. We can't just be a bullish just because we saw the support and say support. We got to find a reversals, consolidation, then try to be a bullish. We can't just simply immediately. It could be a trap. So that's why I always been telling that watch out all the supports. Watch out at this time particularly because market conditions are changing. This is not just a simply one headline news for micros. This is all overall geopolitical news is taking place. That's the reason I would be on a sideline and wait for Microsoft, because I know companies definitely fundamentals are great for the companies, but there is always air in the balloon, and in to leak some air. That's what the Fed is doing right now. We have no control over on this one, and the market will play the role. And the first thing, air will be leaked in a stock market, because that's where the fastest money goes, fastest money comes out, and then it goes to the it affect to the company, and then company also becomes sluggish a little bit, and that's how it will control the economy and demand and supply. So today, in fact, I one more thing I want to show you that on my tweet about, sorry. Mm, so let's see what, that was one other thing I mentioned today tweet also in this, as you can see right here. Fed bailed out in March 2020 with a 0% rate and buying all kind of junk debts. Now jobs and economy at the peak, but inflation is at 7% to bring down air will come out of the balloon on a tech and growth stock. Air was filled in 2020 while we were locked down to balance demand in supply. So what I do is, this is like a Fed, right? Jeremy Powell right here on balancing himself. So basically, demand and supply is just like our board here, where we have to balance. You cannot go this way, or you can, otherwise you're gonna fall. So inflation right now is high 7%. We got to bring, and deflation is -7%. So we got to bring somewhere near here 0, 1, 2. Like that's how we, just like our life we live has to be balanced. So demand and supply has to balance. You can't be one side up and one side down, otherwise it's not going to work out. So if you guys like what I'm teaching here, and if you like to get some alerts on Twitter, you can sign in with the Twitter and subscribe with Top Trading Edge to get all the top knowledge, top trading knowledge. So sometimes I always guide not to trade is also another trade. So uh, this is the time where you got to be careful when you want to be along for buying something. I would say pause yourself, because you always look for opportunities. You can't just simply you think, oh, because there are many people are dollar cost average. Oh, stock was $300, it's gonna go 500, so they bought it here and then they keep buying here. Oh, right now it's 300, below 300. Let's go and do the dollar cost average. Why you want to put your money where you already in the mud and keep putting money and then keep going down? That's not the right way to average. You average it once it reverse, if you want to. If you already in from the top, that's mistake you did. Now you know the top trading edge. We will always guide you. Follow us on Twitter, YouTube. I'm new to on YouTube, but I just started making videos. So at least you come to know that I always guide the right way. My 20 years experience in market, it teaches you exactly how to understand the market. I'm not gonna just take a look at technicals only, because I carry three things. No, I don't carry just the technical. There are so many traders who can do technical analysis, and there are some people who they only carry fundamentals. I know fundamentals, I know technicals, and I know geopolitical. That is the best way to be successful in stock markets, and that's my advice to everybody. Anyway, so Uh, Cut it short. If you guys like my video, please help me out here on YouTube. Like and subscribe also would help me a lot. And if you ask me any questions, below, you can comment below, and I will definitely respond you back on that. And also, you can follow me on Twitter at Top Trading Edge. Um, Thank you for being here. Until next, goodbye.